Hello guys, last week we had huge news from Tesla doing a split, Warren Buffett investing in gold, Airbnb finally filing for IPO, and huge companies reporting earnings. So in today's video, I will give you guys my opinion on all that. Please smash that like button and subscribe since it really helps my channel out. We saw a lot of volatility in the stock market this week. The Dow Jones was a roller coaster, but it ended up 1.62%. The Nasdaq ended the week surprisingly down by 3.30% since large tech stocks such as Apple, Amazon, and Microsoft all went down between Thursday and Friday. Lastly, the S&P 500 ended up 0.50%. The S&P 500 is up 50% over 100 trading days, making this rally that started in March the strongest one in history, which makes the S&P 500 to approach even more to its all-time high. Now, analysts are expecting the S&P 500 to pull back first to consolidate gains before going higher throughout the end of the year. Would really like to know what you guys think about that. So is the stock market finally pulling back, or will it continue with a huge uptrend? Let me know in the comment section below what you think about this. Now, a lot of things has happened this week. First, 2 weeks ago, Apple announced a 4-for-1 stock split, which means that you will receive 3 Apple shares for every share that you have after market close on August 24th. Then last week, Tesla also announced 5-for-4 split, which again, it means that you will receive 4 extra shares for every Tesla share you have after market close on August 31st. What you should know is that the stock price will also be divided by that amount, meaning that Apple stock will be divided by 4 and Tesla stock will be divided by 5. So if Apple stock is at $459, assuming today is a split, then the stock will be at $114.75. Same with Tesla. If the stock is at $1,650, then the stock will be at $330. Again, assuming that the split is today, which is not, but it is just an example so you guys can understand it. It is very important to know that this does not mean that we will see a change in the value of the company. The market cap of the company or the value of the company will remain the same. It's just that now we will have more shares outstanding at a lower price. Now, why is a split a big deal if fundamentally speaking nothing changes for the company? Well, psychology in people changes when this happens. Why? If someone has only $1,650 to start investing, maybe will not feel comfortable to invest only in one share of Tesla at $1,650, right? And you would say, well, but you can buy fractional shares. And yes, that's true, but not all retail investors have that possibility, nor international investors. So if someone only has $1,650, should definitely not put all the eggs in one basket, but if a Tesla stock is now worth $330, it seems more appealing. And also, psychologically speaking, 5 shares at $330 is more appealing than only 1 share for $1,650. So what do I expect? Do I see the stock going higher after these? Should you invest before the split or after the split? Before answering that question, let's check some historical data. Apple has already split their stock 4 times since they went public. The first time being on 1987 and the last one in 2014, where they did a 7-for-1 split. Microsoft has done 9 splits in history. As you can see, Apple stock is up over 90,000% since they went public, and Microsoft more than 200,000%. So definitely a split does not affect the stock price in the long term. It might affect it in the short term since it will seem cheaper and people will definitely feel tempted to invest in these companies. In my opinion, if you're looking to invest in Tesla, you should definitely do it and hold for the long term. Yes, we might see a huge upturn after the split since way more people will be able to buy these stocks, but in the long term, what it matters is the company fundamentals and performance. As long as the business continues executing well, I do not see why it won't continue its uptrend. Maybe in the short term, we can see downtrends like the 30% drop that we saw in 2018, but in the long term, that will be nothing compared to the return that you might get. That is why the best strategy is always to buy and hold for the long term. And if the stock goes down and the company is still strong and performing well, then average down if you can and just hold. Quick reminder here, guys, I opened a completely free Discord group chat where we're almost 200 members in it. So if you would like to join, the link is down below in the description. Now, a huge company that has been able to disrupt a very profitable industry decided to go public. You guessed it, that company is Airbnb. I suppose all of you already know that Airbnb is a vacation rental company that has definitely been disrupting the hotel industry for some years now. Right now, the company has a valuation of $18 billion, down from $31 billion before the pandemic. Obviously, they got hit really hard due to COVID, since traveling stopped from one day to another, and their revenue fell nearly 70% in comparison to the same period last year. Obviously, vacations have not fully returned to normalcy, and that could take many months until they do, but Airbnb has been a game changer for years and will definitely continue like that. I will definitely do a more in-depth video about Airbnb when they go public, so I could at least share more data analysis with you guys. But let me tell you that this is a company that I have always wanted to invest in, and they're finally going public. I mean, they are a tech company that has been disrupting a huge industry for years, and as I said in my Lemonade video, with innovation and disruptive companies comes big gains. So yes, I understand their revenue dropped a lot and might continue doing so since the pandemic is not under control yet, but people are starting to travel and they will come back to normal and might come back even stronger. Next huge news we saw this week is Mr. Warren Buffett investing in a gold mining company. This company is Barrick Gold. This has surprised a lot of people since Warren Buffett has said for decades and decades that he does not like to invest in commodities. Gold is a commodity, and something I've learned from him is that he does not like gold mainly because it does not produce any cash flow. The price of gold increases just because people are willing to pay more for it. In other words, if you buy gold for $1,000 and want to sell it within a month or two for $1,500 and someone buys it, now gold is worth $1,500. Its value increased because the other person agreed to pay your selling price. In comparison to a company, the price did not increase because their revenue of the company increased or because the company expanded and entered new markets, giving them growth possibilities. The thing is that Mr. Warren Buffett did not invest directly in gold. He invested in a gold mining stock, as he does not invest directly in commodities, but he does invest in businesses. Obviously, it is still pretty strange to see him or his company investing in this, since it gives them a lot of exposure to gold, and as I said, he has stated for decades that he does not like to invest in gold. Now, I will be posting a video on Tuesday analyzing more in depth this move and also about gold investing, so if you are interested in that, make sure to subscribe and turn on the notifications bell. Now, as we have all seen, Apple's services segment has increased year over year with their Apple TV Plus, Apple Music, Apple Arcade, iCloud, and more. Right now, they are currently working on a subscription service for digital fitness classes, looking for ways to diversify even more their service portfolio. Also, they are planning to start offering bundles with different plans to provide consumers a discount for packaging everything together. Obviously, after these, Peloton shares dropped more than 4.5% since investors see it as a kind of competitor for Peloton. So last week we had a huge earnings week with Royal Caribbean, Neo, Lyft, and more. I did posted a video talking about the cruise line industry, analyzing Royal Caribbean and Norwegian earnings report. A quick review: their revenue decreased due to the pandemic and some bad news on the CDC extending the no-sale order until October 31st, but a good news is that they have seen remarkable demand for 2021. But if you would like to know more about the cruise line industry, go and check my video where I do a more in-depth analysis. Now, Lyft. As many of you may know, Lyft is one of my stock picks in August. They reported a decrease of 61% in revenue, but a huge monthly ride increase in July of 78% as compared to April. They beat expectations in both revenue and net loss, which was great news. Now, everything was good news until they announced that they might shut down services in California following Uber if they are forced to classify drivers as employees. What is happening is that the state of California want Uber and Lyft to start classifying their drivers as employees and not contractors. This obviously brings a lot of cost for both Uber and Lyft, since employees become subject to a lot of employment laws, such as minimum wage laws, employment rights and benefits. Also, driver might have to get paid for the time that they sit idle waiting for a ride. The company might enforce new rules that will prohibit drivers to refuse rides or set their work hours. The thing is that California makes up to 16% of total rides for Lyft, and shutting down their business permanently will be really bad for them. Obviously, that is not going to happen, but they might have to shut down services temporarily if this law passes to be able to restructure their business. Now, next week is not that full of companies reporting earnings since earnings season is almost over, but we will see earnings from Home Depot, JD.com, Target, Lowe's, Nvidia, Alibaba, and more. For Home Depot and Lowe's, I do expect to see an increase in revenue since the pandemic has made a lot of people remodel their houses, and they have definitely benefited from that. Now, Alibaba analysts are expecting a huge increase of 47% in revenue for the quarter, and I think that they could beat those expectations since e-commerce has seen a huge uptrend since the pandemic started. Let me know in the comment section below what your expectations are for these companies. Hope you really enjoyed the video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.